Good afternoon, everybody, and welcome to Thursday's Market Sit Rep here at Top Gun Options. Standing here in beautiful New York City, or actually outside New York City at JFK, waiting for connecting flight up to Burlington, Vermont. But pretty interesting morning so far in the markets, and we're going to get to that in a second. Real quick, I want to announce that next Tuesday, which is what, the 27th. Next Tuesday, we're going to be kicking off our next full throttle training. Full throttle, folks, is actually it's nine sessions now. Added a session here, taking you from essentially zero to hero, from if you don't even know how to spell the word options, all the way up to a Jedi Master Training, diagonals, synthetic stock, you name it. So here's what we're going to do. All you need to do is head to go.topgunoptions.com/FT, that stands for full throttle, -academic. And you're going to be able to get access to these 8 sessions, okay? Only $195. I mean, what was it? The other day I did a little bit of market research. There are people charging thousands of dollars for like a similar number of sessions, it's absolute insanity, folks. So $195 for 8 sessions to learn how to trade options. And here's what: for a one-time purchase of $495, you'll get access to every time we do full throttle training. We do these 8 sessions. I don't know, I'd say every other month, about 4 times a year. We do brand new training, all the content's updated. So for the unlimited rest of your life, rest of the time you're on this planet, for only $495, you can get access to all of them going forward. These starting next Tuesday, and the rest of them, unlimited access. If you just want access to these 8 and be good to go and keep access to these, and that's fine too, folks, whatever you want to do. But we added the $195 just for 8 because you all asked for it. And you guys, well, a lot of you also asked for, hey, can I come back? Absolutely, $495, okay? So go.topgunoptions.com/FT academic. Okay, let's get strategic here and talk about what's going on around the globe, because there are a lot of hot spots that are getting ignored. Remember, one of the wisdoms here at Top Gun Options is the market only cares when it cares. And Japan is saying that North Korea now has enough miniaturized nukes small enough to fit on its ballistic missiles, and is a serious and imminent threat. Remember, folks, I mean, there was, what was it, two Octobers ago? Man, 3? I don't know, I'm getting old. 2 or 3 Octobers ago, we had 3 carrier strike groups off of North Korea. We were that close to going to war with North Korea. Yeah, I get Kareem was some young guy, and the president shook hands in Singapore and across the DMZ, and things looked better. Not necessarily mean that things are better, and that this can't flare up in the blink of an eye. So I'll be keeping an eye on this. Also, U.S. drone was downed the other day over Yemen in MQ-9. These things ain't cheap, folks. I get that there ain't a whiz flying it, but they ain't cheap, and it's military technology, but it was shot down by Yemeni air defenses. So, oops, that's going on. And then, obviously, Israel really showing the full strength of the JSF, the F-35 Joint Strike Fighter, the Lightning II, by doing what? Taking off out of Israel, flying into Iraq, blowing up Iranian weapons caches that are being used to kill Israelis. Love it. Love it, absolutely love it. They're also flying through Iraq and into Iran and blowing up nuclear targets. So keep up the good work, Israel. Just because the rest of the world doesn't care, besides the United States, doesn't mean, obviously, they care. Netanyahu's doing a fantastic job. China. Trade. So we have a bear call spread on FXI, the iShares China ETF. We placed this Monday afternoon in our weekly options portfolio. That trade is up $1,500 in 3 days. Awesome. That one's probably going to, not probably, there's a 77% probability it's going to expire tomorrow for $1,800 profit. $1,800 profit on limited risk. Hell yeah. Why am I bearish on FXI in China? Because it's absolutely imploding. We're both getting bloodied in this trade war, but China's getting bloodier. And, you know, they're kind of saying, hey, Trump, if you're going to link any trade deal to Hong Kong, we're not going to have any deal at all. So FXI is going to implode here, folks. Last time we did a bearish double vertical, or actually a bearish afterburner trade on FXI, the 2 trades that I covered right here would have made $20,000 on $6,000 in risk. Right there, I said we're going to implode. We did. And right here, I'm saying we're going to implode again and head lower. Another burner trade. Another reason you need to sign up for the Full Throttle Academic Training, folks, is I'm going to teach you exactly what a burner trade is and how to execute it. Okay. Now let's move on to what's going on. I literally, early morning down in Palm Beach taking off, but I sat there and watched all the business channels on JetBlue. And guess what? The futures, they were down, they were up, and then, Dow opened, I don't know, 100, 150 points and was sitting there blindingly green as I sat here and watched who? First of all, let's debrief the Fed minutes from yesterday. The Federal Reserve, folks, there was actually people who were calling for there were dudes calling for like a 50-point cut. I get it, Kashkari, but because he's a Trump puppet. But most of a lot of people were dissenting, like, dude, we don't need to cut rates. So if you actually sit down like I did and you read the minutes from that meeting, they were hawkish, folks. And, anybody who watched the press conference of this guy after that meeting, he was scrambling to find, after telling us how everything's great and the economy actually is pretty decent, why he's cutting. So they actually called it a recalibration of policy and not to expect like more. Then what happened today? So the market should have went down on that. So yesterday it didn't because we had great retail sales at a low in Target. And then who was it? Neiman Marcus this morning had blowout earnings as well. So really good macroeconomic data. We'll get to the manufacturing disappointment in a little bit, but you have to see what these folks said today. So Esther George is the Kansas City Fed president. In her interview today on CNBC, what did she say? She's like, my sense is we've added a combination and it wasn't required. She said we did not need to cut rates last time. I told you, folks, not only does the Fed shouldn't be cutting rates right now, they need to be raising rates. So she's obviously doesn't agree that we should be cutting interest rates, okay? Now, who did they interview like an hour later? As I got closer to New York, Harker is the Philadelphia Fed president. Now, he's not a voting member this year. He starts voting next year, but he said what? We don't need another rate cut. We should stay here for a while. Oh, man. I haven't checked my Twitter feed before I got on to do the sit rep here, but, this guy's about to get a flamethrower from the president of the United States. Earlier in the week, folks, the president absolutely ripped, shockingly, Jerome Powell, a new one, or actually several. It is not a new one. He's got a lot of them from the president. To what? You got to cut rates a full point, and you need to start doing QE, quantitative easing. I sat on the airplane, folks, and listened to two of our central bankers who said, no, we don't need to be cutting rates. So, ladies and gentlemen, and I didn't, for those of you in accelerated retirement yesterday, I didn't get filled on the S&P 500 bear call spread that we looked at yesterday. I think I'm going to lower that down about $5 and try and get filled. This S&P is going down, folks. Jerome Powell is speaking tomorrow morning out with the beautiful people at Jackson Hole. Look at this. We cannot get back to this 50-day moving average. We've been all over the place today. Jerome Powell, ladies and gentlemen, cannot stand up at Jackson Hole tomorrow and say, we need to cut rates. Wiz, what about the manufacturing data? Lower disappointing manufacturing data. It's, what is it, the first time in like 10 years it's been the manufacturing data printed that low? Well, I got news for you, folks. Retail sales this week were absolutely insane. Let me go down to here first. The Conference Board's leading index, man, this is a huge survey, folks. It's a reading of 10 economic indicators: employment, new orders, consumer confidence, housing, stock market prices, credit trends, and interest rate spreads. This was a absolute blowout number. Consumer confidence, retail sales out of Target, Lowe's, Neiman Marcus. Last week, physical retail sales across the country went through the roof. But here's why, people are like, oh my God, we're all going to die. Whenever you see a reading under 50 when it comes to PMI, that means there's a contraction in, that area in manufacturing. And the services came in a little low too. So I get this. This is a little bit of a brown shoot. But ladies and gentlemen, 75 to 80% of the macroeconomic data I've been looking at right now and recently is fantastic. Blowout. So we're going to look at, and here's what's funny is the market isn't down on this, folks. This is the Wall Street Journal is completely wrong saying that, stocks are lower on disappointing manufacturing data. Stocks are lower because, first of all, stocks should be higher. Ready for this bizarro market? Stocks should be higher right now, ladies and gentlemen, because of disappointing manufacturing data. Right? In bizarro market, good news is good news, bad news is good news, and awful news is great news. This disappointing manufacturing data, manufacturing's in a contraction right now, means what? Well, the Fed has to cut. So stocks should be higher on this disappointing manufacturing data. They aren't. The reason they're lower right now, ladies and gentlemen, I'm telling you, I sat here on the airplane listening to these two people talk, with the beautiful mountains in the background, and they were more like, we shouldn't even be thinking about cutting interest rates again. So what's that mean for Jerome Powell tomorrow, and mean for the Fed meeting coming up in a couple weeks? The president clamoring for a full BIP, a whole 100 basis points, and quantitative easing, and most of the Fed folks saying no. So this is getting ugly. And then the president looked really stupid this week, going from I'm considering an index to the capital gains and a payroll tax on Monday to no or not to Wednesday. I don't know what you're talking about. You're high. I never said that. You literally can stack the clips of him talking out, walking out to the helicopter and completely contradicting himself each day. So no wonder businesses are a little concerned about we don't know where we are right now, because the president can't even from day to day be consistent with things. So this is really, really, really interesting times. Bottom line, right now, I'm going to try and get bearish again on the S&P 500. I think we're going lower, and I'm going to get bullish on volatility. All the idiots that are getting short volatility right now, traders betting on falling volatility, really aren't listening to the Fed, folks. They aren't listening to China. They aren't listening to things. And if you're just trading volatility based on what you're seeing on a chart, you're going to get wiped out. Use your brain. The most important trading technology you have is the 8 inches of gray matter between your ears, okay? All right, I got to get going. I think that's my boarding call to head up to Vermont. So do me a favor again. If you want to get access to our training sessions, head to go.topgunoptions.com/FT-academic, okay? You can get access to the 8 sessions for only $195. Literally, that's a couple $1,000s over at Brand X. And you can get access to the rest of them for the rest of the next couple years for a one-time purchase of $495, okay? All right, I got to get going. I'll be back with a Friday market wrap-up tomorrow from Vermont, beautiful Vermont, after the Fed talk out in Jackson Hole. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless.